What's up, ladies and gentlemen? I am here to do a little bit of quantum shift manual review. This is something one of our own traders who picked up quantum, who's also a student of mine, put together for us. It's great because it's someone who learned from the beginning how to use the indicator and how to use what I do, right? So this was put together by one of you guys, basically. Just think of it that way, right? You came in, you're trying to learn it, you're trying to piece it together. He put this together. It has helped so many people. This guy's name, Sam. Shout out to you, brother. Appreciate everything you've done. Keep doing what you're doing. Don't look back. You've been killing it. Setbacks are going to happen. Keep trucking forward, brother. You've already hit the milestone. You've already gotten some payouts. Keep going. All right. With that being said, let's do a little bit of quantum shift manual review. So I blurred out the little word that we have. If you are part of the MOT gang, right, you are familiar with what we say the Power Hour Show. So this is not financial advice. So this is for entertainment, reading only. All right, so all of this is as accurate as you can get with what I look for. Okay. Awesome. So quantum shift is a powerful cutting-edge trading strategy designed to identify high probability entries and exits with precision. This manual will provide a detailed breakdown of how to effectively implement quantum shift, leveraging trigger signals, trend flips, support and resistance levels, and more. So before we start, if you guys are watching this on my YouTube channel, you already know about the YouTube channel. Hopefully you are subscribed. Hopefully you hit that little bell and you've liked this. Also on here is my Instagram tag, where you can also find some more content on my trading, on my personal life. A lot of fun stuff in there. My lovely wife, and we also have the gentleman that helps us out with this, our producer, Drew. Shout out to you, brother. The content that we put out on there. All right. He included some of his own little trading rules too. I have my own. Hopefully you guys have your trading rules. This helps keeping yourself in check. All right. So trading rules. Zoom out to see if you're not in a trading range. If you are, don't trade. Are we at a key level? A 1 minute, a 2 minute? If so, how are we reacting at this level? A, are we respecting it and wicking the level a few times? Are the EMA lines, this was before, we are calling these action lines now because they are not your traditional EMAs. These create the levels for us. So if you hear me changing EMA curling to action line curling, it's pretty much the same thing. We use them just like people use the EMA curls. We use these in the same manner, right? The crosses form levels for us as well. All right. Are the EMAs curling? C. A lot of times, if we reject a key level, we tend to see a buy or sell signal form on that level. It's a good indication for a potential run. Don't take any trades unless you approach a quant level. So if there are levels above and below, and we're in the middle, he just sits and waits. So these are his rules. Remember, these are his rules. Respect the gold and stop losses. The red lines formed on the buy and sell signal. So not just gold, it applies for NQ as well. These little red lines you'll see, they're orangey red. Those are your stop loss lines when those triggers form. Right. The other thing I want to add on this is you're playing pure quantum, right? Pure quantum, you want to wait for the levels. Now, if you're using something like orb, fibs, some guys I know that use FEGs with this. I have my other personal confluences that I go over with my students as well. I look for reactions around those, just like I do with levels. Okay. Respect Javi's TPs. All right, these are my personal TPs. You guys can decide to do what you like, respecting your risk. But this is something I gave as a guide. This is what I do. Right. With gold, first TP was basically one whole dollar or 10 ticks. And then the second is 1.5, 15 ticks. Now, since this, right, is a little bit updated, I do go for a little higher on gold. I go for 1.5 and 2 now on just the 1 minute plays. If I see the alignment, I will go for a little more. My runners tend to collect the most. But again, right, Nice little addition that they add here. Biggest thing that will hurt you is not noticing if you're trading the range. That hurts everybody. 2, what EMAs make up the quantum EMAs? So he put this as secret sauce. I will not tell you. Sorry, but not sorry. They're not your traditional EMA lines. I want to make that clear. They're not your traditional EMA lines. We call them action lines. What are the dashed and solid lines I see on my chart that go horizontally? These are what we call quantum levels that appear once an EMA cross is formed on different time frames. The dashed lines are formed when the 1 minute crosses, and the solid lines are formed when on gold it's the 2 minute, and on NQ it's the 5 minutes. So I want to bring that up here, right? We do that because I've extensively back tested on NQ and on gold and metals so far. Only gold. This only so far applies for gold. I've not gone into other metals yet, but I went deep dive into gold. You want to see this right here, your time frame 1 SR and time frame 2 SR. That 1 SR should never change. It should stay on 1. Now the time frame 2 SR, this is what will change between gold and NQ. On NQ, I keep it at 5. On gold, I'll switch that to 2. Boom, and I will hit OK, and it'll update. Now, I'm focusing on NQ. I'll leave that on 5 for NQ. All right. The solid lines are formed from the higher time frame crosses. So for gold, it will be the 2 minute, thus the change, and for NQ would be the 5 minute. All right, boom. What is the importance of the dashed and solid lines? The solid and dashed lines act like support and resistance zones. This is important because 2 things normally occur at these levels. A, rejection. 2, or A1, A2, a break and retest for continuation. Sometimes there's no retest and a straight breakthrough. You have to be cautious of that, especially when we're in range. This is important to know because we don't want to wait for price action to reach these quant levels before we take any trades. I'm sorry, we want to wait. Not we don't. We want to wait. We do not trade in between quantum levels. Again, if you don't have any other confluences that you're using, right, you want to wait for it to get to those levels because those levels give you a clear indication of what may occur. So be patient on those. Here's a beautiful, nice little example. What do you mean by in between the levels? Remember, patience pays for portions, quoted by our great comrade at MOT, Llama, Red Pajama. When I turned into Lavi, or Lavi, I think we called ourselves Lavi. I forgot what we called ourselves now. You know, patience pays for tortas. In case you guys remember that. All right, number 3, remember, we want to increase our odds of winning, so waiting for price to reach these areas add to our confluence, thus adding to our probability of taking a good trade. Okay, awesome. So here we have a good example. Price action is here. Take a trade here can be very risky since we have no areas of interest. Okay, let me zoom out so we can only focus on this. Okay, no areas of interest, support or resistance for our confluence. Right, taking a trade higher, we want to wait for a trade here at our 1 minute quantum level. We want to take a trade here at our stacked quantum levels, combination of 1 and 2, or this is a gold example, or 1 and 5 for NQ. All right, do I need to have premium trading view to trade gold? No. However, to trade gold, you need to at least have essentials plan for the 2 minute chart. So 2 minute chart is very, very, very important for gold trading. Those levels on the 2 minute, the reactions we see on gold are based on the 1 and 2, just like the 1 and 5 on NQ. So for gold trading, right, can you only trade on the 1? Yes, you can, absolutely. Having that 2 minute data, it's going to give you a big, big boost and a higher probability of catching really good trades on gold. Okay. So because the 1 and the 2 minute time frames are the more important time frame for gold, the 2 minute time frame may not be available for free TradingView users. Number 2, how do I set my take profits for gold? So again, right, this is an example of what I shared beforehand, and thus I've updated it to a little higher. So before, I used to do 10 ticks and 15 ticks. Now I do it 15 and 20. Obviously, you guys can use something like ATR, right? The average true range if you want. You guys can make this your own. I gave a little bit of a guidance, what you can do. I have 2 TPs I always take. One is risk reduction, second is the main TP, and usually my runners will collect the extra. All right, leave runners and TP where you see fit. Sometimes price can run from one EMA level to another. Sometimes they do, right? These levels love to get tested. Some people use them as TPs. I personally don't, but I do collect along the way. And if I have a runner and it's getting close to one of those levels, most likely it's going to start rejecting there. I'll trail a little bit closer. So these are TPs that Javi has backtested and shown to guarantee hit. I want to say guaranteed hit. Okay, I want to make sure it's a high probability that it'll get hit. Right? I've taken losses. I'm not perfect. Pay yourself with the first two TPs and let your runners make that money. Don't be greedy. Love that he put that in there. All right, how do I set my take profits for NQ? Provide that too, right? I have my two TPs on NQ. I have my 5 points and my 10 points. 5 points risk reduction, 10 points main target. All right, quantum TPs for gold A++ set are as followed. And I think he typoed that as meant for NQ. TP15, TP210, right? That's my personal takes. Leave runners in TP where you seem fit, right? I always let my runners run from back entry, and I'll let it collect where it goes. And if it approaches a level, boom, I do rinse and repeat. All right. He also notes that sometimes price can run to one enemy and to another, and they act like manics. These are TP set by Javi. Backtested, of course. Don't be greedy. How do I set my stop loss? Right. Here's a beautiful example of that. This specifically for quantum signal candles. Under or above each candle, you will see a little red-orange line, as shown, right? Some people see it as red, some people see it as orange. The extra line symbolizes where your stop loss should be. However, you should give it a couple extra points of room in case you get a random wick. So every once in a while, especially during Asia session when the volume is low, you'll get some random wicks. Asia session gives a lot of very low risk trade setups, but you get wiki during that time. So sometimes you might like do a little quick wick, like and you'll find several 7 points or less risk trades during Asia when there's movement. But again, you're going to get some wiki action. So I always give it a couple points of breathing room when the risk is already super low. You can put at your swing high, swing low, depending where you're at, depending on the risk that you're willing to take. Okay. So the red line symbol is where your stop loss should be. Give it a couple points of breeze sometimes, so you'll get wicked out. If the price was to come and break past the red line, that symbolizes a failed bullish or bearish move. Respect the quantum stop loss. Yes, respect the quantum stop loss. I agree with that 1000%. Once it breaks that quantum candle, right? You got your purple bearish quantum candle and your blue bullish quantum candle. And you guys can change it to whatever color you want. That is an indication that one of two things, right? If it's a bullish candle that it broke through, we're probably going to come back down. The downtrend is either holding or there's a flip. Second thing that could happen, we might be entering a range. So you want to be cautious on that. All right, and he included a little bit of sizing in here. So this is like the kind of information we provide in the quantum chat, right? We're all in there very active. I myself am very active in there. We do sessions every week. I want everyone to see the powerful tool we have here that gives you guidance, right? We're constantly providing education. This isn't one of these, oh yeah, come join us, and then we kind of blow you off to everyone else. No, we're in here constantly showing the possibilities, the control that you have. And I've been killing it, right? I have made most of my prop money, actually all of my prop money, majorly using quantum, right? I have my other confluences. Like I said, I have personal confluences that I add to it, that I use, that I teach, that give me the extra kind of like extra points when I catch bigger wins. And I know, guys, you've probably seen on some of the videos, the sauce box, that's a major confluence of mine. I catch huge trades off the sauce box. And then obviously if I don't have sauce box in play, usually I'm playing quantum. All right. So how do I size according to my account? So we provide a little bit of guidance on how I like to size, right? 25K accounts, 1 to 3 micros, you do a ton of damage with those. 50Ks, 3 to 6, 75Ks, 6 to 9, 10, 9 to 12. And then just added 3 per 25. Just keep adding 3 per 25 is basically kind of that structure. Now the reason, if you guys notice, right, everything is in an interval of 3. Why, right? If you paid attention to what the TPs that I had set before, 5 and 10, 10 ticks, 15 ticks, right? 15 ticks, 20 ticks. What do? I take partials out at each price target. So I like to have intervals of 3. One set will go at 5, one set will go at 10, and then my runners run. If the play is really good, right? If the setup shows up, guess what? Your runner could run. I've caught multiple 40, 50 point trades off a couple runners on micros. It adds up super fast. I'm not doing this to get rich. I ain't doing this to be flashy and show off huge wins. I have fun every once in a while in an eval, but my funded accounts, they're all very, very, very strict with my base hits. All right. So how do I size according? So we got all that. If you plan on trading gold, understand that gold has 1 to 2.5 leverage compared to NQ. So gold contracts do move a little bit more in terms of price. So your sizing might differ, but 3 cons is recommended. Remember, small hits add up. over time. 200 a day, 52K a year. Okay. I always tell people, start with those little targets, get used to them, build your accounts, get some payouts, right? Don't try to throw money into the system and aim huge off the bat. You're going to end up burying yourself a little bit before you end up start getting consistent. So you want to reach for consistency first. How do I set up alerts for the buy and sell signals? Yeah, it's a nice little here tutorial for that. Go to your TV, and at the top of your screen, you should see an alarm clock with the text plus alert. Click that, and a pop-up will appear. And here are your symbols. Click whatever ticker you want. Click on Quantum Shift. Set any alert functions. Gives you a lot of options on what you want to set. I personally don't set alerts. I like to see the movements live, but you absolutely can. But I've got a few in the group that do test alerts here and there. I personally only trade when I'm watching the chart live. I like to see the price action live. I don't like to get an alert pop in and then not know what the price has been doing over the last couple minutes, but that's me. Other guys, we do it a little different. All right, how to set up Quantum Shift for NQ and Gold. We kind of went over that already a little bit. If you need a visual representation, go ahead into my YouTube channel. We are here already. Got a lot of other videos on that for you. And I explain a lot about the settings. So up to the two different screens on TradingView, I have two screens, just like I'm kind of giving the little kind of visual guidance over here on the two screens, right? You see your 1 and you see your 5 minute and your 1 minute. This is how I usually have my chart set up, right? As you'll see here, right? There's a beautiful closing little sell, buy, right? And what were my 5 minute? Like the 5 minute was very rangy over here. There were still some decent moves happening. And then at the end, triggered this big boy, right? Tested our level. You see your 5 minute level form here. And the price kept pushing up because the two kept lining up. But we'll get into that a little later because there's an explanation on that here too. This is usually how I have my chart set up. Got my 1 minute, my 5 minute. Got my gold, I would have my 1 minute, my 2 minute, right? Do I constantly have to look at both? No. I like to have, my best trades come with both the 1 and the 5 or the 1 and the 2 line up, right? If they're both going in the same direction, when my levels are about to form, the stack level formation, I catch my best trades. If the lines are separate, if I see potential room on the one just basically to potentially test an action line or a level, I can still scalp a trade here and there if the risk is low, okay? All right, open up two different screens, just like I have here. Open your first screen up on NQ or MGC. You'll have the 1 minute, and then you'll be able to choose your 2 minute for gold or your 5 minute for NQ. All right, things to know. Gold's strongest time frame pairing is 1 in the 2 minute. NQ's strongest time frame is the 1 in the 5. All right. How to set up Quantum NQ or Gold. Continued. Now that we have both screens set up with the appropriate charts, we can now have on, we can now move on to the indicator setup. Click right on your indicator and hover over it and click the settings icon. The first thing you're going to do is select non-premium trading view. Now that option should be set as a default. We did go in there. Owen, the programmer of the indicator, he went in there, made an update where it's auto default to my personal settings. The signals and everything are set up to what I look for, which are just the A++ setups and nothing else. I don't have any filters on. I have none of that on. You can mess with that if you want. There's also in our quantum chat, there's a pinned little, like a glossary of what each setting means if you guys want to look for that. Might make a video on that later on as well. All right, so first thing you're going to do is select non-premium. That should be already selected if you don't have a premium. Even if you have the essential plan, you must toggle non-premium because it'll affect the charts on the seconds, right? If you're not using the seconds chart, you don't want to have that on. You won't collect data from that and it'll kind of throw off the 1 minute a little bit. So you want to have that on. Go to your time frame 1 SR and select the 1 minute. Go to the time frame 2 and select the 2. The time frame 1 SR is always going to be set to 1 off default. So you don't ever have to touch that. The only one you're going to mess with if you're going from gold and NQ is that time frame 2 SR should be moved for 2 minutes for gold, 5 minutes for NQ. If you're trading both NQ and MGC, make sure you go back into your settings and adjust your time frame. So the way I do kind of prevent, if I'm trading both, I'm kind of looking at both. I'll have either, if you have premium, you can have the 4 charts up. I also have 2 windows open. I'll have 2 windows open. Actually, let me widen this up. All right, I have 2 windows open. So I can show an example where I go this, right? I'll do that. And then I'll have MGC and I'll set up my MGC right over here. just like I would with my NQ, and I'll just go back and forth, and I'll see if there's a setup or anything I'll like to take on either trade. So I'll be, if this is, let me kind of show you guys. So I'll just switch this one to MGC. Okay, so now you'll see up here, right? Let me bring this up closer, and then I'll put this at 2 minutes. Boom. Okay, because gold will be 1 and the 2. And let's go into our quantum settings, and this is what I'm going to do up here. I'm going to switch this to the 2 minute. Boom. It's going to adjust the levels, and there we go. And then you want to do the same thing here on the 1 minute. Boom. 1 and 5, right? You're going to switch that to 1 and 2. And voila, this will make the adjustments as well. And there you go. Your levels adjusted slightly. You can see the reaction, right? You can see this stack level up here where it came up. So now it's slightly rejecting, potentially setting up for a drop, right? You have your nice little buy signal. There's your wicks that would have kind of stopped you out on the initial go. But if you let that 2 level form and it held, you would have caught a nice decent move right there. The 1 minute did give you a little push up here. Then this one obviously spiked up, but rejecting that level up top, came back down from there. Okay, so this is what you want for gold. You're going to see how the levels, right? Boom, boom, 1 and 2, 1 and 2. You see those stack levels forming and giving that push down. Anything else up here? I got some gold sauce boxes up there. All right. Just like to have those little visuals for everyone. You can see when these 2 minute triggers, they give you something, some decent movement here. Boom, boom. This is towards the middle of the day. Looked like it was very rangy, but just a visual. And then I'll go from MGC and Q back and forth, right? And I have to make adjustments if I do it like this. Just a little hack, if you want to call it that. So something I do. All right. Quantum and gold MGC. All right. Before you enter a trade, any trade ensures you have at least 3 different forms of confluences backing your buys. I like 3 confluences. I like to have the more confluence I have, the better I feel about the trade. I don't enter a trade unless I'm okay taking the L, right? I'm looking for the risk. I'm looking at my sizing, and I'm making my adjustments based on what is presenting itself. I respect the stop losses. All right. So some confluence can be the EMA curling into a EMA cross or on either time frame. Formation of a stack level when your 1 and your 5 on NQ form in sequence, right? One will form first, the next one will form second, usually leads to a push. What does that usually look like, right? Sometimes they're far apart, like here. Right, here's your 1 minute signal, there's your 5 minute, right? Both were pushing up, gave you that little push, and that was where it paused, the market was closing. All right, if we go back, where else do we see that? Right up here. Right, this beautiful, beautiful sell drop that happened over here, right? Oh, what do we have? Let's look at what this formed over here. Oh, you can already see it, right? Boom, boom, right? Here's your 5 minute, here's your 1 minute. Look at that. 5 minute form first, 1 minute form second, and look at that monster drop. Like it just crashed. This happens quite often, okay? Does it happen every single time it does it? No, but it happens a lot. I wanted to say it happens a good 80-90% of the time. If you're ranging, you're gonna see stuff like this. You're gonna see a little bit of a move, then comes back down, and then just ranges, pushes back up, then ranges. You have little tiny pushes. But obviously, you're at the close of the market. You're gonna tend to see range, especially on a Friday. All right. Formation of a stack level, rejection of a stack level, just like we saw in gold. We saw the stack level rejecting. Let's see if we see, right? Look, a stack level down here, right? 1 minute, 5 minute. We didn't have the buy signal down there, which is perfectly fine. Sometimes you won't. Sometimes just a stack level can give you a nice little push, just like that. Let's see. I don't have any clean rejections. Obviously, we have some support of a level here that formed that, but I don't have, yeah, down here, right? This is a stack level right below. This held right here, right? So you see your curling. Didn't make it all the way down. Almost hit this 82. What did it get down to? It got to 89, so it got within 2 points. Now you see your curling, right? Curling over here. You could make an entry with about a 15 point stop loss about. Give you a nice little ride, but I would size accordingly based on that. If it holds above this level, the curling holds, you're going to have a good move. Obviously, that's a good, decent move based off that. Just your EMA curling. All right. Cloud trend, right? If you're trending up or down, right? This one, the only problem with this is you're trending down on the 1 minute. Where was this? What time did this happen? 2:32 on Thursday. 2:32 right here. What would it look like on the 5? 2:32 was it also trending? Okay, they were starting to flip. So this 2:30, this was the beginning flip. So it would have been a little bit of a cautious trade. I would have kept it probably on small size, just based on the 1 and the 5 still being in a downtrend. But it presented a nice little play there. All right. Cloud trend, trend line break, right? You use each individual thing as a confluence. Risk to reward ratio, what risk are you willing to risk? Obviously you have your points that you're looking for. It can vary. Higher time frame confirmation, just like we're using the 1 and the 2, are the action lines going in the same direction. Max or Llama's or Logan strategy, right? You got Logan with his Pivot Hunter Pro, you got Max with Orb, and then you got Llama with his Fibs, FEGs, some ICT concepts that he uses. Only his, like Llama stuff is clean. I love to use his confluences with mine. I mainly use his Fibs though. All right. Before you enter a trade, all right, this is something you want to consider. Take some time to watch the charts for each of the confluences listed. See how the EMAs react while approaching the quantum levels. See how price action reacts while approaching the quantum levels. See how the EMA curling acts on the 1 and the 2 for gold and 1 and the 5 for NQ. See what happens to the price once a quantum level is formed by the EMA cross. See what happens when the price reaches the cloud trends, right? So you have little parts of the cloud, right? I don't like to look at the 1 a whole lot, but it gives you a good guidance on how strong the trend is. If you're looking at the trend cloud here, right, it keeps rejecting that first light red. It cannot break it. That's a strong indication of a strong downtrend. Eventually, you began your flip right here. This candle began the flip. There's the break. There's your green. And now it's starting to hold above. There's your second break, and there's your little move. You can use that as a guidance, right? The 5-minute cloud will give you a little bit of a deeper indication on how deep the downtrend or uptrend may be, or how flat it may be for potential range forming. Okay? So each little part of quantum gives you a little tool to look at. Do you have to use it? No, I don't look at the 1 minute a whole lot. I wait for my setups. I look at what the overall picture is, right? I'm going to wait for the level to hit. I'm going to wait for a confluence to line up. And if it looks like the uptrend might be strong, I might not take the trade. I might just wait, and I might let it happen. I might let it just break the trend, and it might go. I might miss a play, and that's okay. I'm not comfortable with it, and I'm not liking the risk. That's okay. Now, if I'm in an area where I have a bunch of levels, I have a soft box in play, top of orb, whatever it may be, I'm going to like those confluences, even if it's uptrending, and I might take a trade for potential rejection, scalp it, or it might keep going. You're going to get into trades, and you're going to see your setups, and you got to take it with confidence. You got to be okay taking the L if it does lose, right? And if you're having confidence issues and you're having like panic attacks getting into a trade, I'm sure it's one of two things. You're either sizing way too heavy, or your risk is way too high. So you got to adjust all that so you're okay taking the L. If you get into the trade and it doesn't play, you're going to be like, all right, I'm going to wait for the next setup, and I'm going to do it all over again. All right. See what happens when the price goes to a quantum level is formed by the EMA up. So see what happens to price once a quantum level is formed, when the action lines cross. All right. See what happens when price reaches the cloud trends. Like we said, we'll see how it reacts on there. If it keeps rejecting the middle, put some time into just watching the charts. This is a very, very helpful tip here. This does not mean you watch and trade at the same time. This will help you tremendously before entering future trades. It does help a lot. Just kind of to back test, but also forward test, watch how it reacts around these areas. The other confluence I love to use, and I know a lot of you guys always hear me saying this in Power Hour, my DOM is going crazy. I use my DOM as an extra confluence. If my DOM starts reacting in terms of the speed at a level, I'm looking like, oh, okay, there's a reaction here. So this is one of two things. This is going to either hold or it's going to rip through it. And it's about a tank or something. Like I use it a lot. So you always hear me saying my DOM's going crazy. Something's about to happen. So A++, this is the best setup for people new to NQ, to Quantum, sorry. Learn this first before you venture off to the other setups. A++ setup includes many different confluences built into one. So we have our buy and sell signal confluences. An EMA cross inside the signal candle. No more than one candle before. Note, do not enter when a cross is above or below from the signal. Okay, be cautious with those. I wouldn't change that to do not enter. I would change that to be cautious when you enter, because if you have confluences, right, if you're getting reaction at the top, but I think this might be based on what the signal itself is going with what he's explaining here, but if you're still getting a reaction with your curling and you're reacting at a level or a key area for you, I'll enter the trade before if it happens, but that might trigger the cross with that candle, even if it's above. Just something, again, I'll add in here. But it is something, to take note. If the cross on a bearish quantum candle is above it, right, chances are, if it retests it, it's going to break your bearish quantum candle, and it's a failed bearish move. Same thing on the other side. If it's a bullish quantum candle, one of our blues, if it tests the level that it happened to form below it, could break the quantum bullish candle, and it could go the other way, or it could form a range. All right, so a stack level, this double stack level, we are looking for the A++ setup. It's a combination of both the 1 minute and 2 minute, or the 1 minute and the 5 minute. So here's some good examples of that, right? A++ buy, cross happened within, right, in the middle or behind it. Same thing here, in the middle or behind it. Now, I'm going to show you an example of where you want to be cautious, okay? The cross happens in the front half of the candle. The move's already usually in progress. So something like this. The cross is happening in front. It's not happening in the middle. It's not happening behind. I want to wait to see if this level will hold. You see that initially it broke through it, closed above, but the bearish candle and the downtrend were holding. It continues to stay below 600. This happened to be a 601 level. It breaks back below 601. Good chance it's going to keep going, and it left. This gives you a advanced read setup. Okay, I've gone over these on my videos. The advanced read setup is the retest of this area. Stop loss is the candle, and you're looking for the hold of the purple candle. You got a couple confluences added with the downtrend to go in the direction you're looking for, right? Obviously, it held below 601. It could not break our bearish quantum candle, and there's your move. So the cross did happen in front. I would not get in on this candle after it closed and it gave me that signal. I would wait to see if it comes back to retest for an advanced read potential. And if it can hold below, your candle, you're going to get that move, right? If you had opportunity to get in at 601, 602, your stop loss could have been at 608, 609, 7 points. Look at the move that ensued afterwards, okay? Obviously, this was also in the range. If you look at the quantum range, you can hear that candle actually broke the previous bullish quantum candles, did a little retest. These are my favorite quantum range plays. We'll go over that a little later. It's in here as well. And there's your beautiful break, retest, go. Beautiful setup there. All right, so A++ sell, A++ buy. It also has a little stack level mixed in there. You can see the little solid line. That's your stack level. All right, things to watch out for in the A++ setup. We do not take every buy or sell signal we see. Okay, keep that in mind. No indicator that gives you buy and sell signals without explanation are good. Okay, we give you an explanation of why they trigger. We want to give you a good understanding, but we also want to make sure that you're cautious, that you have a good amount of confluences for it to potentially go in the direction you're looking at. So if we look back here, right, we did have a little buy signal. Did it play out? Yeah, but how many points did it give you? 601. Okay, gave you about 10 points, right? Gave you about a 10-point run. Entry would have been kind of close, but what do we see here? You would have not gone in on this unless you anticipated, which I don't recommend. But if you got in at 611.75 at candle closure, that would have given you your 10-point run up, and then you would have been out. It gave you an opportunity for an advanced read to enter around 600, have your stop loss at 594, and then catch the little push up again. But once you see these back and forth blues and purples, that's your range. And then you do that little thing that we do, right, where you draw your lines at each area like that, like so. And that will be your range. And there's your break, there's your retest. All right. Getting ahead of myself here. Like I get so ahead of myself when I do these. So, all right. Always zoom out and see the bigger picture. The number one killer for the A++ setup is a signal formed inside a pocket range. Sometimes price will break through the range, but not all the time. The majority of times when the A++ setup presents itself, price will normally run in its direction. However, if we're in a trading range, price can easily reject at the top of the range and gets sucked back into the range, continue to range, and then we have a 50-50 toss-up for either direction, and that's where you want to wait. Remember, the goal is not to increase our probabilities of being right. The goal is to increase, yes, the goal is to increase our probabilities of being right. My dyslexia kicks in. So here he includes a beautiful example. You can see the multiple crosses, right? This one only crossed once here and once over here, but this is multiple crosses. So this area where you're seeing the multiple crosses is going to be a major area. That tends to be your center point. So above and below needs to hold in one direction, and then guess what? You're going to use your quantum candles as your second point of guidance. You can see where they're crossing, and then your quantum candles are going to be your points of interest if it can break one way or the other for that potential move. All the other candles, I don't care about. I'm looking at the quantum candles. All right, so this setup is just like our A++ setup minus the buy and sell signal criteria. An EMA cross inside the signal candle or no more than one candle before or after. Do not enter when the cross above or below. Same exact thing, a stack level. The double stack levels are for the A++ setup in combination on both time frames. The 1 and the 2 for gold, the 1 and the 5 for NQ. So cross plus solo level, okay? Things to watch out for this setup. The same as the A++ setup, range, 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 don't be greedy. Love that he includes these little notes in here. All right, quantum range. You first must know how to identify quantum range before you can even attempt to take a quantum range break play. The range is best identified when the candles appear back to back in the same general price. That is an important note. You don't want to see one candle all the way up here and then your next blue candle all the way down there. That is not a range. That's just your big bearish candles that are up top and your one bullish quantum candle below. This is what you want to see. You want to see them back to back in the same price area. So between 595 and 610, they're kind of in between the 90 area. So they're kind of there. You can see the flat. You can see how it's back and forth right here. All right, let's look for more examples. Right here, same thing, right? Your quantum purples, quantum blues, back to back. You can see it. Right? If you zoom out, and you can really look for them. There's another set right here. And you can see where your range kind of sticks around. Other set right there, okay? Important to be able to identify these. Very important. All right. So the top of the range would be the top wick of your bearish purple candle. And that, okay, so here's a great note that has not been broken. And what do we mean by not been broken? Meaning there hasn't been a candle closure above or below, okay? So in this example, right here, right, we would have, before we get to this, we would have our purple bearish up here. Then you would have your blue right there. So if these blues have not been broken, this one very close. We don't play this tip game here. All right, it got very close. This broke back in. Boom, boom, boom. There was no blue here yet. Once the blues appear, there's my bottom. There's my one that attempted to break. Pop back in with another blue at the exact same point. Now that's my little range. When that purple broke through it, oh, look what happened. Broke through, retest, retest, retest. Gave you a blue here. At this point, what could you do? You could move the range down here as well. So you're already kind of pushing down. And then look, there's your break, failed bullish quantum candle. There's your move. You can see it happening in slow time. Took a little time, boom, boom, boom. And then, oh, we got a little pause at the cloud, right? The green uptrend is still holding. Here's your blue and purple range play. So here it was scary because you had your purple appear right after the blue. If it kept going and broke below this 625, this bottom green, you might have kept going. Immediately you got another blue. Boom. Then there's your candle that broke. There's a little bit of a retest, and there's your launch. Skyrocketed. And then you'll see it again over and over and over again. Very simple to track these, and we're just using the quantum candles. That's it, right? I don't care about the other candles. I just care about my quantum candle, right? Sometimes you're going to see stuff like this where it breaks back in. Now it's kind of testing, like, oh, does it want to come out? It just kind of hovers, holding the break, holding a little downtrend. It's just retesting this whole area. Then you can see these little purples coming in, and then you could kind of like add a line there, obviously, if you want to. If it stays below that line now, you should see a potential continuation push. Right, first it was this guy. There's a little tiny tip break. We don't play the tip game. Next one came in purple again. Then you move that there. And then another blue. Boom. Oh, look, big purple that broke through everything. A++ setup also. Combination with that. And there's your little down move. And here's your failed buys. Obviously, if we didn't have a level down here, there was probably nothing good there. There's where you kind of had a flip, and it retested that little range area. But you can see all these range setups all over the place. You see how it tests through, and it slowly breaks. And it's fun to track. It's fun to see it slowly progress. And this is a setup that a lot of people overlook, right? Quantum is not just the signal. So a lot of people overlook the most basic of the setups that quantum provides. Everyone wants the fancy signals, and it's not always the signals. You're going to get stuff like this, the back and forth. Here's a little fight. Here's your failed bearish move, and here's your push up. As long as it stays above that bearish candle now, it should continue to hold. Then we formed another one, slightly re-entered that previous range, and then it continued up. Trend was holding. Every bearish candle kept getting devoured, and it kept going up. Okay, nice little. That's why I like to have the charts side by side so we can kind of go over what we see. All right, the top of the range would be the top wick of bearish at the bottom of a blue. All right, bottom bullish. If no candle closure has broken either the top or the bottom, the candle range is still in play. So it's important to take note. That candle has to not be broken by a candle closure, not a wick. Here's a beautiful example of it. Like, I love the visuals that he put in here. Quantum range, right? He drew the line right above the purple, and there's your line below the blue. Bottom range, top of your range. These candles, none of them break, so the range is still in play. Beautiful visuals. The visuals he put in here are just chef's kiss. Mwah. Beautiful job, Sam. All right, quantum range break. Entry criteria. The more confluences you have with this, the better. Just entering based off a range break can be dangerous. Wait for a candle to break and completely close over, and then, over the top or the bottom. This is not the initial entry. Wait for the next candle for confirmation. That's my style. I wait for the retest, okay? Sometimes it'll break and it'll just run. Some people take the trade on those. The risk is I always put it either to one of our quantum candles or the candle that led the break, right? You guys can play them how you like. This is just guidance that we give based on my style. All right. Once the candle is broken, the range, the next candle will become your entry candle. That's the retest candle. The following candle comes and retests the top or the bottom, then continues in the desired direction. Sometimes price does not come and retest the range, it completely rips up. Sometimes price breaks range and immediately gets sucked back into the range. This is why playing range can be extremely dangerous. I like how you put extremely dangerous. I love to play range. I love it. Like, when everyone's getting eaten up in the range, I'm in there like, ha! I'm passing accounts left and right. Price getting sucked back into the range. Here's a beautiful. I love the visuals he included on this. Honest question: would you have taken this trade based off price just breaking the range? Make sure you have added Confluence to help you the probability of you taking the trade. Price tries to escape range, just gets sucked back in. You can see how it broke out, gave you a retest. It gave you opportunities to scalp. It's hard to see from this picture how much it really ran up, but it gave you some opportunity for a push up before it got sucked back in and retested the whole range. Okay, so that's a little note from what I'm seeing here. Just still, you see situations like this where the range is like, oh, it's no, and then no. Take a look at a higher time frame range. Sometimes that helps. All right. Price breaking range here. All right. Oh, there's a continuous. So this, retested the whole inside range and then made its move again. So bounce and rejection off the bottom of the range leads into an EMA cross, leads into a bullish. So it goes into a bearish cross first, then a bullish cross. So it's your little guidance there. It depends on also what the higher time frame was doing. Most times where I see this, I went over this on one of our sessions. you want to see both line up. So what could have happened here is you had your 1 minute potentially crossing down while your higher time frame was attempting to cross up. So they have to align usually for it to give you a solid move. It looks like there was a solid little push up. So it crossed down first, then crossed up to give you that move. Obviously, it also held your range. All right. So bounce and rejection off the bottom of the range leads to an EMA bullish cross, break out of range. Price tries to come down to retest, but pushes back upwards. Okay. Quantum range break, TP, and stop loss. There is no TPs for quantum range plays, like there are with the A++. So TPs, like they can vary. You can do what I do, right? 5 and 10 and runner. You can have your own TPs. You can set whatever you want to set with your risk factors in play, but you always want to be cautious. Obviously, I am the kind of trader that I take green. I don't like to turn my green trades red, but I don't micro scalp either. I'm not going to just take 2 or 3 points. The 5 points is usually risk reduction, as I've said that many times. The 10 points is the main TP. If I see it struggling to hold up to the 10 points, I may go break even immediately, just if I see it kind of really struggling. Or I may just start trailing it, like, okay, I'm going to just hit it at 5 at this point because it looks like it might struggle. But if I see like the 1 and the 5 minute lining up, like a quantum, like a push-up level, I will hold. Like I'm going to let it stop me out if it stops me out. So I'm not trying to tell y'all to play fearful, but you want to be aware, right? I'm a scalper. I'm going to scalp what I see. I collect tons of points a day, but I will let it breathe if it looks like the setup could run. It's just based on you. I'm not always taking 5 points. I'm taking majority of the time 10 plus points. All right. So their stop losses. Okay, so there is a set stop loss for range plays. The stop loss is set either to the top or the bottom of the breaking candle, depending on your buy and sell. So that's the beauty about quantum, right? Everything, we have stop losses for everything. Okay, we put it in here, how to play these and where to place your stop losses, either your quantum candles or these plays is usually for the ranges is the break, the candle that's leading the break. We use those as our stop loss. So you should always have a plan, right? Quantum is a beautiful plan. I know where my stop losses are always. Guys, listen to me in Power Hour. If you listen to us trading live, right? Not financial advice. I always say where my stop loss is going to be. All right. So example 1, attempting a bullish breakout. This is the breakout candle. This is our stop candle. So he's got the breakout and stop candle. So you see the little line, right? This would stop you out right there. Bullish breakout, same idea. Boom. That's your stop. There's your go. Love the visuals he puts in here. Love it. All right. EMA curl. An EMA curl can be formed at any time, whether it be in between quantum levels or at a quantum level. An EMA curl can just be a quick scalp curl play, but sometimes can lead into an EMA cross that leads to the A++ or A setup. So depending on what's happening on the chart depicts how you're going to take this play. If you're playing for a quick scalp, then this can happen in less than 1 minute. Be careful playing the quick EMA curl scalp. I wouldn't say be careful on that because these are the lowest risk plays. These are usually, right, you want to be cautious. You don't want to take the higher risk ones, but these are usually like the low risk entry plays. So criteria, preferably when price meets a quantum level. You want the EMAs to tighten close together. You want the EMAs to touch the higher odds of the EMAs curling. So you want it to kind of hit the level a little bit, get really close. The closer the better, gives you the least risk. Okay, the farther the EMAs, the riskier the play. So the closer these lines are, definitely helps a lot. All right. So here's what happened. So the picture, we didn't have a level here, but further, okay. So the picture to the right is an example of why playing an EMA curl not on a quantum level can be scary. Okay, so he didn't have a level here. Yep, no level there. Okay, I see it. So there can be no quantum level acting as support to ensure our curl can actually curl and eventually lead into a new cross. This doesn't mean taking our curl play at quantum levels 100% success rate. This just means we have more confluence leading into a curl, thus proving our probabilities. Yes, beautifully put. Things to watch for with the EMA curl setup. The EMA curl starts to happen when price momentum is starting to change. Take some time to watch the chart before you attempt to try an EMA curl play. Just because the EMAs start to curl does not mean there will be an actual curl all the way and form into a cross. Watch what happens to the price once an EMA attempts to curl. EMAs can uncurl just as fast as they can curl in the pictures right before it. Absolutely true. You have to be cautious. That's why the more confluences you have, the better. All right, so this is pretty much going over most of the same things for NQ. The advanced read is something we haven't played so much in gold, even though lately it has been playing. But gold is pretty much usually just runs off of A++ setups and levels. But for the advanced read, it works a heck of a lot better on NQ, but it does sometimes work on gold as well. So the advanced read is an A++ level a setup that we learned from with gold, with one more extra step of Confluence, a retest and bounce off the built EMA cross line. Keyword bounce. We want to see price quickly reject the newly built EMA, failed, bearish, or bullish move. So it's not always new. There are extended uh, advanced reads, which means just that there was no initial test. It pushes high up, probably tests another level or hits another area, then comes back down and retests the A++ setup. And then sometimes you'll have an extended play. I sometimes play those, sometimes I don't, but they vary. They vary on the momentum that it may go. Right? I'm always cautious when I do play them, but your stop losses, you know where your stop loss is going to be on those. All right, so an EMA cross inside the signal candle or for no more. Okay, so no more than one candle before. Do not enter when a cross above or below. So same criteria as below. You want to be cautious on those crosses that happen above or below these candles, because the retest of that level could mean a failed bullish or bearish move. A stack level is the double stack levels where the A++ setup is in combination with the 1 and the 2 or the 5 EMA levels, the higher time frame level formations of rest and bounce of the newly created lines. All right. So this is what we want to see. We want to see approaching a stack level or just an A++ setup, and you want to see that bounce. So here's a nice little reaction of that. Here's a nice little picture for you. Sometimes the rejection of the EMAs can be very quick, so your entry can differ each time. TPs are the same as the A++ setup. First is 5, second is 10. Leave runners to collect for you. Yeah, but again, this is my personal takes, right? You guys can do whatever you want. 5 points, 10 points. Did you see that quantum gang? Boom, easy TPs hit. Yeah, this ran hard. Stack levels give you a lot of potential big hit runners. But again, I say potential, right? Because I don't chase home runs. I collect my go as I go, and my runners collect the majority for me. But I've done it so well for so long. I do not change my plan. I keep it to what it is. And you guys can adjust it to your liking, right? Do you have to go for the 5 points? No, you don't have to. You can go for 10 off the bat. It's up to you. That's what I do. So if we see price wanting to retest the EMAs and failing, we want to see a reaction at these EMAs, either a wick or and a flip or a sign of a failed bullish or bearish move. So you just want to see the levels hold. That's all we want to see. We want to see these levels hold. A++ setup. Every retest, right? Retest 1, retest 2, stop loss will be right below the candle, and you're looking for that push. Obviously, it gave you that push. Don't be greedy. Pay yourself with these TPs. I agree with that. Make sure you don't let a green trade turn red. Things to know about the advanced read A++ setup. Range can be our number one killer for the advanced replay. Absolutely, range tends to be the number one killer for everyone. Remember, we do not take every buy or sell signal we see. Always zoom out and see the bigger picture. As mentioned before, the majority of times when an A++ setup presents itself, price will normally run in its direction. However, if we're in a trading range price, we could easily reject at the top of the range and get sucked back in the range, continue to range, and then give us that 50-50 toss-up. Remember, the goal is to increase our probabilities of being right. Beautifully put. Backtest, backtest, backtest. A part of learning a new strategy. Backtest it. Don't just come in expecting this thing to do all the work for you. It does a good amount, but you have to understand what you're reading. This is not just buy and sell, right? You have these monster, big purple candles. I go through several ways to play this. There are several ways. This is a whole little strategy built here, right? We got those quantum candles. I'm not looking at all these candles in between. I'm looking at my quantum candles. Once I have my quantum candles giving me my potential setup, depending on what the confluence is at, then I'll wait to see, if I have a range play, then I'm going to use the other candles. But I'm only looking for that specific candle that breaks the range. The A++ setup, the normal, entry is the candle closure of that quantum candle in the A++ setup, or wait for that retest of the level if it gives it to you. It does not always give it to you. The stack level formations tend to run. So those, when I see those, I usually begin my entry at the candle closure of the 1 minute or whichever level is forming first. Okay. All right, things to know about backtesting. Very important. When you go back and start backtesting quantum, make sure you're backtesting on replay mode. Don't just go back and see all the winning trades. Yes, this is good because it's easy to go back and you can see, right? You could ignore all these. You could see, okay, kind of played out, but didn't give you that much points. What was going on here? Where did it bounce? Right? Pay attention to these things. Look at the strong uptrend. Okay, this was uptrending strong, and you could see every failed bearish move continuously, and then here's where it finally paused, right? And in non-backtest mode, we don't know if there's a level here. There could be a level up here, right? Maybe we had orb. I don't know. At this point, I don't have anything there, but it gave you a nice little rejection, a nice little pushback down. But there must have been something here, right? There had to have been something there. If there wasn't, I might have not taken the trade. It could have just been pull down, and I'll be perfectly fine. But then you can see, right, little buy, little kind of tempted to push up, rejection, pushes, and just makes a little bit of a range. Gives you this big purple look like it wanted to go, got sucked back in, gave you that little push up, right? This could have been a 5-minute range. Then kind of pushed back in, retested that bottom side again. You had your little 1, 2, 3 touches, and then gave you that continuation push up because it was uptrending for most of the day. If you zoom out, right, it's uptrending. Gave you a little pull down here, still uptrending. It was still uptrending. So the uptrend kept winning. There was some pullbacks here and there, like the market's going to do. But the overall picture, it was going up until it finally started kind of flipping a little bit for that big pull down that we saw. And you can see beautiful signals mixed in there. In between, you're going to see stuff like this, right? But how can we identify where this could potentially happen? You had your previous range right here. You had your previous range right here. So this is looking like a high range area where it just flatlines. You see your cloud flatlining, everything's flatlining. Random wick up, maybe news, I don't know, 702. Hopefully there's news at that time. Random wick up until it push back down. Okay, important. So backtesting is fun. I do recommend backtesting on replay mode, absolutely. You want to see the overall picture. All right, understand why. So don't just go back and see, yep, all right, understand why did the setup lose? Just again, right? Why did it potentially lose? Always important to know why you lost a trade. Don't just ignore a losing trade. Go back, just like in football, basketball, right? Somebody missed their assignment. Somebody didn't pass the ball where they were supposed to. A running back didn't run the right route. Whatever it is, go over the plan. Why it didn't work? Why did the setup fail? Was I mid-range? Did I get in by assumption? Did I not wait for the confirmation? There could be several reasons. Was I too close to opening? So many reasons a setup could fail, but it's good to have an understanding of why it failed. Sometimes we're not going to have an understanding, but attempting to learn why helps with that growth. It helps tremendously, right? I went through all of this before, how I learned to play all these setups, because I played them all. I did every single one, and I stuck with the ones that gave me the repeated winners, right? The setups we went over, the repeated winners, the advanced reads, the A++ setup, the range plays, the level reactions. All right. Were there any quantum levels right above or below that caused a rejection? Did we reject at the cloud trend? All of this is important information that can help you stop a losing trade ahead of time in the future. Studying the losses is just as important as studying the wins, but don't disregard the winning trades. Absolutely. You also want to see, hey, I read this right. I saw the level, I saw the curling, I saw this, boom, boom, boom. It played out beautifully. So don't disregard the winners, but definitely learn from the losers. Backtesting part 2. When you see the reaction in one time frame, make sure you go back into your higher time frame and see what it did at the higher time frame. See what the reaction happening at the exact same time. That's why I have both up next to each other. Okay, if gold, for example, if gold forms a cross within the body on the 1 minute chart at 704, go back to the 2 minute time frame and see what happened at 704 as well. Was there a cross form too? If there wasn't, what did price do? Was the cross, was the EMAs going the opposite direction? Were they going the same direction? Little things like that. What was the trend like? If there was, what did the price do? Understand the correlation between the two time frames So understanding that correlation is very, very important for your confluences. Remember, the more confluences you have going into your trade, the better your odds will be. Sometimes I get stuck. I have dyslexia, so sometimes when I get stuck, I have to I reword it in my own way because I can kind of read it, or I'll kind of like pause and get stuck and have to read it twice in my head. Yeah, you guys are noticing that. No trading strategy is 100%, but with quantum, we can higher our probabilities. Don't ever be afraid to post in the quantum channel. If you ever get stuck or wonder why your trade went bad, yes. Yes, yes, yes. I have a couple in there who have done so. Post all the trades in there, good and bad, and now they're reaping the benefits. They took the time to screenshot their losses, ask the questions, and review. And not only did it help them, it helped a bunch of others also. Oh, I didn't see that. Oh, I didn't know that. I love when the community does that in the quantum chat. Everyone learning together. These little things help just tremendously. Go ahead and post your trade with both time frames. Make sure you zoom out so we can see the bigger picture. Write your thought process and confluences going into the trade. We are here to help each other get better and to become profitable traders. Amen. We've all taken bad trades. We've all been emotional while we're trading, which leads to revenge trading and blowing accounts, oversizing in our trades. You name it, we've done it. Don't be afraid to ask the questions. It's happened. Nobody's perfect. I'm not perfect. I've blown accounts. I've blown evals. It's a part of the process. The goal in the end is to get those payouts. It's to take more money out than putting in, building that confidence to get into the live environment and doing the same thing in there. Okay. Did you see that, quantum gang? Did you see that, quantum gang? So there you have it. There's a quantum shift manual that is pinned in the quantum shifts chat. Sorry. So it's in the quantum shift chat in the Max Options Trading Discord. We have a bunch of very active members in there, a lot of first time pass evals, a lot of first time payouts. I've shown off my payouts in there. I don't like to put them out, but I'm constantly out keeping everyone in tabs as well, right? We do the study sessions every week. I do power hour every Monday through Friday when the market's open with my brother Logan, right? He uses PHP, I use Quantum. You can follow along, you can learn with us, you can see what we see, you can see what the Quantum gang gets to see. It's all in here. The process to learn this is in here in this channel and in that Quantum chat. So don't be afraid. Get in this game with us. Reap the benefits. Don't go and just throw your money around into props without having a plan. If you're unsure of what your plan may be, we have a plan. We're here to help. We can get you there, right? But it's up to you. In the end, it's up to you. I've said this many times again. You got to follow your plan. You got to set your rules. You got to follow your process. But we're here to help. We're here to grow. Not financial advice, as I always say. Just a plan that provides a clean setup, clean stops, everything set here for you all. So thank you for watching. Like and subscribe. And we'll see you on the next one. Peace out.